If you've been watching my channel for a while, you've probably realized that I stand out among other people here on YouTube. While there's plenty of other channels on this site that go over dividend growth stocks, the number of people who like to focus on income investing or a mixture of dividend growth and income is pretty small. When I started this channel, I didn't expect to receive the amount of viewers or the number of subscribers that I've gotten up to this point. But I think two reasons why views on this channel have been so high is because people have been genuinely curious about this style of investing, and also it filled an unfilled niche that wasn't being met that people who were investing for income were looking for. Without a doubt, one group of people are either at or coming close to retirement and they're looking for some higher yielding investments that don't focus as much on growth. Because at this stage, you're not interested in pursuing growth or other high risk holdings, especially with the stock market being as volatile as it is right now. So holdings that can earn you the most passive income bang for your buck that matches the amount of risk you're willing to accept is what's driving your interest in high yielding stocks and ETFs. But I think there's also a large group of people who are regular dividend investors, but they're genuinely interested in this style of prioritizing income stocks and funds over prioritizing dividend growth holdings. You might be a dividend investor that holds stocks like Johnson & Johnson, Coca-Cola, and McDonald's, but at the same time, you might also own some shares of a covered call ETF like QYLD or RYLD. Or perhaps you even own a few shares of some business development companies like Ares Capital or an exchange-traded note like USOI to increase your portfolio's total dividend yield. For me personally, if you couldn't tell already based on my other videos, I love to focus on holdings that prioritize higher yields over growth. I love to target stocks that offer huge dividend yields in exchange for stocks that only offer 1 or 2% yields but offer more share price appreciation. I don't put all of my money into income stocks. I still hold some larger yielding growth stocks like Realty Income, Main Street Capital, and Oaktree Specialty Lending Corporation. But income is definitely my favorite type of investment in the stock market that I like to focus on. But maybe you're wondering, what on earth could someone find so appealing about pursuing income over growth even if you're not retired? In today's video, I wanted to go over why exactly I personally like to invest in the way that I do. Keep in mind that my goal for creating this video is not to try to convince you that my method of investing is the best. That's never at any point been the objective of this channel, and I've never said this method of investing is the best, because I recognize that there are some disadvantages to how I invest that turn some people away. I do the majority of my investing in a non-retirement account, and I invest in things that pay high dividends that for the most part are often non-qualified. As you can imagine, people who hate paying taxes don't like my investing strategy. Now, if you invest in a tax-advantaged retirement account like a Roth IRA, then taxes aren't an issue that you'll have to think about. But investing in high-yielding stocks and ETFs in a non-retirement account often earns me a lot of criticism from people who are tax-averse. And I also don't hate the more traditional dividend growth investing. I don't dislike index fund investing or even people who pursue growth investing in stocks. I'm also not against people who invest for growth now and then in 20 or 30 years as they get closer to retirement move their holdings into dividend stocks. These are all good methods of investing, and as I've mentioned in the past, I do hold index funds in some of my accounts as well. But for me personally, the most motivating way of investing is mainly through income investing, with dividend growth coming in second. So today I'm going to present 3 reasons why I like to invest this way, and I'd also like to encourage people who maybe never considered a more income method of investing. You might find this style of investing a lot more addicting compared to just index fund or dividend growth investing, like I know it sure was for me. The first reason why I prefer income investing is because I love investments that give me heavy cash flow. What I've discovered is that I'm extremely motivated to save and invest more money in things that provide me with consistent high amounts of cash flow on a quarterly or even better on a monthly basis. I love looking at my brokerage account's transaction history and seeing so many lines of dividends being deposited into my account. I enjoy seeing all of my investments provide me with consistent income deposits all the time. I found that seeing dividends being deposited into my account is much more satisfying than simply monitoring the share prices of my stocks. Because in a way, I found that when I only care about the share price of a stock or an ETF, like with a growth stock that doesn't pay dividends, I tend to check it obsessively. And whenever we're in a bear market like we are right now, if the share price keeps falling for a prolonged period of time, I'd find myself second guessing my investments. I can recall all throughout my early to mid-20s, I used to be more focused on growth investing than income. It would happen where I'd read a newspaper or a magazine and see a stock that I thought looked good, and then after doing some more reading and coming to my own conclusion, I'd invest in it. But if the share price kept falling for more than a few months, I'd struggle with buyer's remorse. But here's what made me a fan of income investing. A lot of higher yielding investments like business development companies and closed-end funds have a share price that basically flatlines over time. Some of them do rise and fall more than others, but for the most part, a lot of higher yielding investments don't see much action in their share price. Instead, they offer dividend yields of 8 and even 10% or more. When I see the share price of these kinds of holdings slowly move downward over a period of time, I hardly care at all, because it's the dividends that I'm focused on. To me, a dividend cut is much worse than a share price falling 10%. In fact, if it does fall and if the fundamentals look good, then I can buy more shares for less and get a higher dividend yield. It's for this reason that I'm also a fan of real estate investing, particularly with rental properties. So I guess I kind of like to invest in stocks and ETFs that basically performs in this same manner. Pursuing income investing just feels more enticing for me personally with these high dividend payments. The second reason why I love income investing is because it's possible that you might never have to sell shares of a holding in your portfolio. If you're able to build up a large enough portfolio, the amount that you collect in dividends on a monthly or quarterly basis can be enough to cover your living expenses. Let's take a look at a common example. Let's say you're 65 years old and you decide that you want to retire and live off your stock portfolio on January 1st of this year. For simplicity's sake, let's assume that your entire portfolio is in one single ETF, the Vanguard S&P 500 ETF. On January 1st, you own 2,277 shares of VOO at a price of $439.25. This gives you a total portfolio value of just over $1 million. You might have higher than average expenses due to health issues, or maybe you just enjoy living in a more expensive area. But you expect your monthly expenses to be $3,000 a month. With this in mind, you plan to sell shares of VOO every single month so that you'll be able to deposit $3,000 into your bank account to cover your expenses. So on January 1st, you need to sell 6.83 shares of VOO to cover your monthly expenses. But on February 1st, instead of selling 6.83 shares of VOO, you need to sell 7.21 shares of VOO. This is because, as we're all aware, we're currently in a bear market, and to date the S&P 500 has continued on a downward trend. Once March 1st rolls around, the price of VOO has dropped another 5%, so now you need to sell 7.59 shares of this S&P 500 index fund. Fast forward to July of this year, and you now have to sell 8.57 shares to cover your expenses. And who knows if the stock market is going to continue to fall in the months ahead, but you can see the problem that we have. As it continues to fall, you have to sell more and more shares of your portfolio to cover your expenses. This can have a really bad impact on your retirement savings because it eats up more and more of your money. It can even shorten your retirement if you don't have enough money saved up. How many times did you hear back in the 2008 financial crisis and the dot-com bubble of people needing to leave retirement and join the labor force because their retirement savings took a massive hit? Now, obviously, if there's a very prolonged recession and stocks don't experience much growth for a long period of time, you're obviously going to cut back on spending. Most people would be smart enough not to just charge through their retirement savings as long as they could help it. But what if you could live off your investments without ever having to sell shares? What if you could build an income portfolio or a dividend portfolio that pays you every month or quarter and you never have to worry about the share price fluctuations? During times when we're in a bear market and the share price of everything keeps going down, imagine not having to care one bit if the share price of your holdings go down, even by 10 or 20%, because all you care about are the dividends and not the share price. You'd instantly have a lot less anxiety during turbulent times in the stock market. It is possible that there could be dividend cuts if we were to go into a major recession, but making sure that you have a diversified portfolio of different holdings, including REITs, BDCs, closed-end funds, covered call funds, and the sorts will help ensure that you'll be able to weather economic storms like the one we're currently experiencing. It's also important to dedicate at least some of your portfolio to growth, which will help with inflation. A holding like SCHD can help make sure that your portfolio continues to grow if you're not reinvesting your dividends. But in my opinion, the idea of never having to sell shares of your holdings to fund your retirement is another part of income investing that I just find insanely attractive. You don't get that kind of luxury from your typical S&P 500 index fund unless you happen to have an insane amount of money invested. This can also help with preserving your wealth. If you don't sell shares during retirement, it can make things like passing on your investments to a loved one easier. A third reason why I enjoy prioritizing income over growth is because it's easier to estimate when you'll be able to switch from working a job to living off dividends. When income becomes your main objective, if you budget your expenses, you can get a much clearer picture of how close you are to retirement, unlike building up a position in several non-dividend paying stocks and ETFs. Let's say you've determined that after budgeting and taking taxes into consideration, you estimate that you'll need $3,000 a month in dividends in order to quit working full-time. It could be more, it could be less, but we'll keep this example simple. All you have to do is log into your brokerage account, look at your transaction history, and see how much you currently make each month in dividends to determine how close you are to quitting your job. Let's say when you look at your transaction history of all the dividends from your high-yielding stocks and growth stocks, you see that you currently bring in $1,000 each month. You automatically know that you're 1/3 of the way there. Compare that to a more traditional way of saving for retirement. If you currently have $920,000 in a brokerage account, can you honestly tell just by looking at that number if that's going to be enough to retire off of? What if the market tanks and your portfolio value drops 20% just like the market did this year? I know it's not too difficult to determine how much you'll need to retire, but this way of investing makes it less clear in terms of when retirement is within reach. I'm the kind of person that likes to have a clear goal. $3,000 a month or $4,000 a month in dividends is a clear goal, and it's easy to see how far away you are from it. And I believe when you have a clear goal in mind, it makes it much easier and more motivating to pursue it. I was less motivated to invest back when I used to only put my money in index funds because it was harder to tell how much that money would be in the future. But when I invest in stocks like PennantPark Floating Rate Capital, I can see right away that this week I can afford 53 shares of it. 53 shares will pay me $5.03 per month in dividends at its current rate, and it brings me closer to my monthly goal. This just feels more motivating to me than putting $500 in an index fund, which again, I still do invest in index funds. Plus, I like to see those dividends being reinvested each month, and each month I collect a little more in monthly dividends and it buys more shares, and I'm just closer and closer to my goal. So those are just some of the reasons why I'm a fan of income investing. Again, I'm not trying to bash other forms of investing, and I'm not trying to convince you that my way is the best way. I fully expect a number of my holdings in my portfolio to underperform the market, and I'm absolutely 100% okay with that. But if you're interested in collecting higher payments, there's nothing wrong with pursuing a more income-oriented approach to investing. What's most important is that you're using the investing strategy that's best for you, as long as it's not crypto or NFTs. And that's going to conclude today's video. Thank you all so much for watching. I really do appreciate it. If you found this video informative, please consider giving it a thumbs up below, and also subscribe to the channel if you want to see more high-yield dividend investing strategy videos. It would just let me know that there's enough people out there who want this kind of content, and I'll continue to provide you all with that content. Alright, thanks again guys so much for watching, and until next time, take care.